Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss Altruist Solo 401k. It's not too late. Upgrade your Altruist Solo 401k for 2025 Mega Backdoor Roth. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So if you have questions or topics that you wish to discuss, please chat that over now so that we can be sure to get to them all, as we definitely want to use this time to answer the questions that you have or discuss the topics that you wish to discuss. This is our daily Solo 401k webinar for My Solo 401k Financial. We host daily webinars, so we invite you to subscribe to our channel. That way you get notifications of when we go live. We also invite you to like this video if you end up finding it to be helpful, as that'll help us to get the word out to other advisors, other solopreneurs like yourself. We want to use these sessions again to answer the questions that you have, and just generally, we're here because we want to help you stop overpaying taxes and start building real retirement wealth. So with that, let's get started by going through some of the slides that we wanted to share. One second. All right. So let's start out with an eligibility discussion. So in order to be eligible to set up a solo 401k, you, if you're the solopreneur, or your client, if you're an advisor, needs to meet two eligibility criteria. Number one, you have to be reporting earned self-employment income. So that means that, for example, you have to report income reported on Schedule C of your 1040. If your business is a sole proprietorship, or maybe it's a single member LLC that's taxed as a sole proprietorship. If your business is taxed as an S corp or a C corp, earned self-employment income would be income that's reported to you and paid to you as W-2 wages. If your business happens to be taxed as a partnership, for example, where you're filing a Form 1065, earned self-employment income would be income reported on line 14 of the partnership, of the K-1 that you received from the partnership. The other half of the eligibility equation is that you cannot have any employees working for any business owned by you or a spouse, if any. Specifically, you cannot have any full-time, non-owner, non-spouse W-2 employees. So that means you could have a contractor that works for you, and that would not prevent you from setting up a solo 401k for your self-employed business. You could even have a W-2 employee, but they could not meet the eligibility criteria. So they couldn't be someone that's 21 years of age or older and working either 1,000 hours a year with a year of service, or 500 hours a year for 2 consecutive years. But in short, if you meet the eligibility criteria because you're self-employed with no non-owner, non-spouse, full-time W-2 employees, then you're eligible to set up a solo 401k. And a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. So it's a great opportunity in that case. Now, what you can take advantage of in terms of your specific solo 401k depends on the type of plan that you set up. So you'll see in the marketplace that there are providers that will offer basic solo 401k plans. But if you want to be able to take advantage of more advanced features, like the ability to make Mega Backdoor Roth solo 401k contributions, among other advanced features like the ability to invest in alternative investments like crypto, or the ability to take a 401k loan, or the ability to claim $1,500 in solo 401k tax credits, just to name a few of the advanced features of our plan, then it's not just as simple as being eligible to set up a solo 401k. It's also about choosing the right plan provider. Now, it's very common with our customers that they've started out with the basic plan somewhere else, and now they want to upgrade and graduate to a more advanced plan. So let's take Altruist as an example. So Altruist is a platform for advisors to open up accounts for their clients. And you can open up a basic solo 401k plan on Altruist's platform. But their plan, based on experience and client feedback, is not going to allow for making mega backdoor Roth contributions because their plan documents don't support it. Specifically, they don't support the 2 steps that are required to make a mega backdoor Roth solo 401k contribution. So in order to be able to make a mega backdoor Roth solo 401k contribution, you need to have plan documents that allow for both voluntary after-tax solo 401k contributions, as well as an in-plan conversion of those voluntary after-tax solo 401k funds to a Roth account. Could be a Roth solo 401k or a Roth IRA. Those are the 2 steps of the mega backdoor Roth strategy. So you first have to be eligible to set up a solo 401k plan and then have a plan that allows you to do that. But the great news is that if you have a plan that doesn't support the mega backdoor Roth solo 401k, you can always upgrade your plan documents to a plan like the one offered by my solo 401k financial that does allow you to make those mega backdoor Roth solo 401k contributions. Now, the process to upgrade your plan is referred to as a restatement. So it's, in that case, the plan will continue, but it'll be new documents that govern the plan. So those documents need to be restated. You can think of it as a cut and paste, right? The existing limited vanilla documents are cut out and replaced with the advanced documents provided by my solo 401k financial. Now, as part of the process mechanically with Altruist, because that existing account that you have for your basic solo 401k plan that you set up with Altruist, from Altruist's perspective, is governed by their plan documents, you would need to open up a new account at Altruist or new accounts at Altruist that are governed by people that bring their own plan documents. So it's governed by a plan, for example, offered by my solo 401k financial. So at Altruist, and this is very common where the brokerage will offer their own basic plan, but then also open up accounts for people that bring their own advanced plan. So at Altruist, the name of the account type that they open for people that bring their own plan documents is referred to as a retirement trust account type. So if you have that basic solo 401k plan, but now you want to upgrade it to our plan, new accounts would need to be opened, and we are very hands-on in helping our clients and their advisors open up those new accounts, transfer the cash and assets over from the pre-existing account that was opened up for the basic solo 401k plan over to the new accounts, the applicable new accounts. So if that person has pre-tax cash or investments in their basic solo 401k at Altruist, all those cash and investments would then be transferred over to the new account for pre-tax funds, but that's governed by the third-party advanced solo 401k plan document provided by my solo 401k financial. So that transfer from the pre-existing account to the new account for the third-party plan, that transfer is not taxable, it's not reportable, because really it's just going from one account for a solo 401k to a new account for the same plan. Now, for those that want to be able to make mega backdoor Roth solo 401k contributions, the great news is that there's still time to be able to make mega backdoor Roth contributions for 2025. There's still time, regardless of whether you already have a solo 401k plan that have been set up before the end of 2025, or even if you don't have a solo 401k plan. Because even if you don't have a solo 401k plan, under the rules, you can still establish a new plan in 2026 and make 2025 contributions as long as you set up the plan and open up the accounts in time to make those 2025 contributions by your 2025 business tax return deadline, including any timely filed extension. So the great news is that with Altruist, based on our experience and client feedback, they're very fast to open up the accounts. A lot of times the same business day, or definitely within one business day. So even if you're coming up to your tax deadline, you can still open up the accounts, make those 2025 Mega Backdoor Roth contributions. Because when you make that Mega Backdoor Roth contribution, you're making a voluntary after-tax contribution. And so even though a plan might be set up in 2026, regardless of your business type, you can still set up a plan in 2026 and make both employer and or voluntary after-tax contributions, which is how one makes Mega Backdoor Roth contributions. Now, if you want to set up a new plan in 2026 and make employee contributions, it would be too late to set up a new plan in 2026 and make 2025 employee contributions unless your plan is taxed as a sole proprietorship. In that case, you still could, as a sole proprietor, set up a plan in 2026 and make employee contributions for 2025, regardless of whether it's an unincorporated business taxed as a sole proprietorship or even a single member LLC that's taxed as a sole proprietorship. You could still set up a plan in 2026 and make those 2025 employee contributions, but you would have to be certain to make those 2025 employee contributions by April 15th of 2026, even if you file an extension for your 1040. If you file an extension for your 1040, that'll give you more time to make the after-tax contributions, the Mega Backdoor Roth contributions, in other words. It'll give you more time to make the employer contributions. But if the plan was not set up until 2026, it won't give you more time to make the employee contributions. Now, that limit for 2025, in terms of those Mega Backdoor Roth contributions, is the overall limit, because that's what the overall limit is, the limit that applies to voluntary after-tax contributions. In other words, as long as you have the self-employment income to justify it, you can contribute up to $70,000 as a voluntary after-tax contribution for 2025. So the process to make a Mega Backdoor Roth contribution, again, it's a two-step process. So you're first making a voluntary after-tax contribution. And the reason you're doing that is because of the limit is so much higher, right? For example, it's 10 times higher than the Roth IRA contribution limit. And it's multiple times higher than the employee contribution. And then the second step is you want to move the money over to a Roth account so you got that potential for tax-free growth. Okay, we'll just touch on a couple more slides and we'll turn to a question. Additional benefits. Setting up our plan will make the business eligible to claim tax credits, $1,500 in tax credits. So that's even for existing plans that are upgraded. Again, you can take a loan. You can invest in alternative investments like crypto. We provide the ongoing compliance support. So for example, when you make that Mega Backdoor Roth contribution, the first step, the voluntary after-tax contribution, doesn't have to be reported on the personal or the business tax return. But the second step, when you transfer to the Roth, that does need to be reported on a 1099-R. And we handle that for no additional charge. So key takeaway, you don't have to leave Altruist to unlock these advanced features like the Mega Backdoor. You just need the right plan documents. As I mentioned, Altruist is very fast. My solo 401k financial is very fast, right? We prepare the documents within the same business day when clients sign up, but it's still going to make sense to act now just to give yourself and your client plenty of time. The process is very easy. You just go to mysolo401k.net, click on open account. That'll take you to the online application. The client or the advisor on the client's behalf can submit the information. Now, if the advisor wants to be copied, a pro tip would be to include the advisor's name and email address in response to the final question, asking for the name of the plan. That way we'll copy the advisor on all communications. But once the application is submitted and payment is made, we prepare the documents within the same business day. So now let's go to a question from Yash. Does my W-2 income from an S-Corp have to be a certain size to maximize the Mega Backdoor Roth? Yes, it does. So you can't save more than you earn. So your W-2 income, for example, from your S corporation would have to be at least as high as the contribution that you want to make. You can't save more than you earn. So for example, for 2025, if you set up a plan before the end of last year, so you're upgrading, say, an existing plan at Altruist, you can upgrade it here in 2026 and still make all types of contributions. If you didn't set up a plan, you could even set up a plan as an S-Corp and at least make the after-tax contribution. So you would need, though, at least $70,000 of W-2 wages from your S-Corp to justify a $70,000 after-tax contribution. You'd have to make that contribution by the S-Corp deadline, so March 16th or September 15th if you file a timely extension. That's a great question, Yash. We really appreciate it. And again, if this is helping you feel more confident about your future, please like this video. It's going to help us get the word out to others just like you, other advisors, other solopreneurs. We invite you to subscribe. Subscribing gets you notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also invite you to our community, mysolo401k.net/my community. It's totally free to join. All are welcome. Just takes a moment. We've got the largest community. We've got over 30,000 solopreneurs, advisors, other interested parties, and that translates to active forums. We have a library of videos and webinars, so there's a ton of ways to learn, a ton of ways to share the knowledge. All right, well, that's wonderful. Thank you so much. Appreciate the great engagement. That's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable. Your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.